Okay, so moving average again. So how can you use moving average to define an area of value? So here's how. So in trending markets, for example, in an uptrend, a moving average can act as an area of value. It will look something like this. So let's say market is in an uptrend, higher, makes a pullback, another high, pullback, another high, pullback, another high. When you overlay with a moving average, let's say the 50 period moving average, you would realize that the price, right, has bounced off the moving average a number of times, once, twice, 3 times, and if you come back for a 4th time, okay, we can say that, hey, this is an area of value, and this is where buying pressure could step in and push the price up higher. So which moving average do we use? We have 1 to 1000. For me personally, I like to use the 50 period moving average, because for 50 period moving average, the trend usually tends to be a healthy trend where you can see the ebb and flow of the trends very clearly. You can see the pullback. It's not very shallow, it's not very deep. To me, it's just nice, right? The sweet spot. Of course, you don't have to use the 50 period moving average. Some people prefer shallower pullback, then they use the 20 period moving average. Some people prefer, a deeper pullback. They use the 100 period moving average. So there are, different types of moving average you can use. Ultimately, right, you have to find, right, the type of trends that you want to trade. You might be wondering, but Rayner, how do I know whether, the moving average holds up? Sometimes I look at different charts, the price just sliced and dies through the moving average, right? Doesn't respect it. I get it. So this is why before we use moving average as an area of value, we want to make sure that the price, respects the moving average. And we use these 2 tests, right, to confirm it. So let me explain. So let's say market is in an uptrend, then makes a pullback, goes up, makes a pullback, and then goes up. And you overlay with a moving average, it has to be tested at least twice. So this is 1 test, and this is a 2nd test. So this way, if the market comes back for a 3rd time, all right, I know that, hey, this market seems to be respecting this moving average. I have more confidence, right, to use the moving average to define my area of value, having, proven itself 2 times previously. So this is what I mean by, at least 2 tests to confirm it. So let me walk you through some charts so you know what I mean. So you can see over here, this is Brent crude oil. Over here, we have 1 test. Price test the moving average once. Then it breaks above this swing high, tested a 2nd time, breaks out above this swing high, and then tested here a 3rd time. Okay, so we have 3 tests over here. So this means if in future, maybe for a 4th time, the price comes back to this 50 period moving average, I can say, hey, this is an area of value for this particular market, and on this time frame, I can look for buying opportunities at this 50 period moving average since it's acting as an area of value. Okay, and then in this case, right, yep, it did came back and tested I would say a 4th time over here. So now some of you might be thinking, Rayner, why isn't this a 4th test? And that's a good question. And the reason is because for me to define a test, the price must break above, the swing high or the swing low. So in this case, this was already the 3rd test. But the price, when it tested here, it did not break out this swing high over here. So I don't consider this a 4th test. The price has to break out of this swing high. Only then, when it breaks out of it and retests, would I consider it a test. Okay, so that's the way I define my test. Dollar against the Japanese yen. Same thing. If you look at this, price tested once, bounce up, tested twice, heads up higher, came back a 3rd time. We have 3 tests over here. So again, on this market and on this time frame, dollar against the Japanese yen, 8-hour time frame, I would say that, hey, the 50 period moving average, right, is acting as an area of value. I can look for buying opportunities if the market pulls back towards the 50 period moving average, since it's respecting it. In this case, I tested a 4th time and then just collapsed and break down. Aussie against the Japanese yen. So let's have a look at this and see if there's any tests. So over here we have 1 test, price breaks out of the swing high. 2nd test, price breaks out of this swing high, came back a 3rd test, then start to chop. It hits higher, but eventually I think you saw what happened, right? It hits higher. So that's how you kind of define the test and use it to serve as an area of value. And just one last final example, you can see over here the dollar against the Chinese yuan. You don't have to use the 50 period moving average. For this one over here, you can see that the 20 period moving average can serve as an area of value as well. So you can see 1 test, hits down lower, 2nd test, hit down lower, 3rd test, hit down lower, and there's another 4th one over here, and 5th, and so on. So one thing to point out is that when you see this chart that is respecting the 20 period moving average, if you look at the depth of the pullback, this one is much shallower compared to the 50 period moving average. If you look at the depth of the pullback, it's usually quite shallow compared to the 50 period moving average one, like on the, let's say, the dollar yen. 8 hour, you can see that the depth of the pullback is much deeper, right? This one you can see is much deeper, and much deeper. So this, right, gives you more time, right? If the depth of the pullback is, I would say, longer, in this case of the 50 period moving average, you have more time to plan your entry, right? Compared to a 20 period moving average where, you need to scramble and act fast. So this is why I prefer, right, using the 50 period moving average to define, right, the area of value in trending markets. Okay, let's do a quick recap to what you've just learned. Number one, area of value helps you to decide where to buy or sell. You know exactly where on a chart, right, you can look for buying opportunities. Where on a chart exactly you can look for selling opportunities. And to accomplish that, I share with you a couple of tools and techniques. You can use support and resistance or moving average, right, to help you identify your area of value. And in fact, you can actually use both as well, support and resistance and moving average, to define your area of value. Okay, I'll cover more later on. So that's what we've just covered. So at this point, right, market structure, right, it tells you what to do, whether to be looking for buying opportunities, selling opportunities, or to stay out of the markets. Then we have talked about area of value, where to buy, where to sell. Now the next question is, when exactly do you buy or sell? When is the right time to click the buy button? When, right? That's where we will talk more about it in the next section, which is called entry trigger.